actually the moderator on stage. So Joyce, can you please join me here? She's a remarkable woman, doing so many things that it's hard to remember, but including the things like blockchain and digital identity efforts in Reuters. You're teaching data science in UC Berkeley. You're a founder, an investor, a mentor, so a lot of things. And then I asked off stage Joyce, so you're doing so many things, so what do you actually do to kind of relax or to have fun? And then she said, well, I'm an e-resident as well, and also on the board of e-residency programs, so seems like this also is the time for you to relax.
Yeah.
But I'm going to give the stage to you now, the future of banking, and you can invite the panelists on stage.
Come over, all the panelists. Thank you so much for the introduction. I live and breathe tech, so I actually think my job is really fun, and it's really honored to be here. This is my third time in Estonia in 2 years, and I feel like pretty soon I've become a Estonian resident citizen too. So we have an hour here, and I like to think that we have a really cool panel that made up of individuals who are building different kinds of companies within the financial services space. And we're going to cover a lot of ground today within an hour. We're going to talk about Bitcoin, blockchain. We're going to talk about peer-to-peer lending, digital banking from different perspectives. So again, my name is Shen. I run emerging technologies and the venture fund at Thomson Reuters based in New York. The firm has $11 billion revenue, work with financial services, legal, government, enterprise customers. And I work a lot in the fintech space, and in fact, we're one of the investors in Funderbeam, so very proud of that. And why don't we do introduction, just your name, who you are, and what your company does.
Okay,
Sampsa.
shall I start? My name is Sampsa Laine. I do run a business banking operation in Nordea Bank, Finland. We have been developing this company for more than 150 years. We have done our first startup actually financing operation in, I think it was 1855 or 53, I don't recall it correctly exactly, but something like that. We also been a fintech more than 30 years. So the development still goes on, and at least on my personal view, banking has never ever been as excited as it is now. Most likely it's even more exciting in 2 years' time or 3 years' time, in 5 years' time. So very excited on our future.
Great. Norris?
Hey guys, I'm Norris. I'm a CEO and founder of Monese. And Monese is a banking service. I can't say bank, but it's pretty close to a bank. So we have created a bank that aims to be a global bank. And the one thing that makes us really, really unique is the fact that we are open for everyone. And what I mean here is that if you ever have been moving to another country and you have ever had any difficulties opening a local bank in that bank account in that country, then you know what I'm talking about. It can be extremely difficult. So we take all this pain away, and we give anyone a bank account in 2 minutes. All you need is your mobile phone and your passport. That's it.
Jevgenijs?
Hi everyone, I'm Jevgenijs, and I'm the head of Twino peer-to-peer platform. Twino is one of the leading peer-to-peer lenders in Europe. We lend money across 7 different geographies, such as Poland, Russia, Spain, and so on, and have investors from across over 30 countries. Launched just 2 years ago, but quickly got into the top 5 in continental Europe, and approaching 115 million euro in loans funded through the platform in just these 2 years.
John?
Yes, my name is John Matonis, and I am one of the original founders of the Bitcoin Foundation from 2012. I'm also an investor in a new global Bitcoin currency exchange, which is based in Riga, in Latvia. And in addition to that, I do corporate strategy for a new startup in London called N-Chain.
Great. So why don't we start first with the business model and talk about some of the new platforms. So Monese and Twino, how do you make money from either consumer or the enterprise side?
I can start. So Monese is maybe a little bit different compared to an average. Well, we are headquartered in the UK. So typically, UK banks don't charge anything for having customers having a bank account, but we do. We have sort of a membership or subscription fee, and we wanted to put a price on our services because there is no free lunches. It costs us loads of money in order to provide the services because we have to pay everyone else. So we cannot provide services for free. So we wanted to have a transparent pricing. We said, let's make it super easy to understand. So let's put a price, let's say $4.95, and let's say there is everything that you do with your Monese account and debit card and whatnot. Let's have all these fees inside that $4.95. There is literally nothing else that you have to pay for. You can use your Monese account to receive salaries. You have a debit card. You can spend it with your debit card anywhere in the world. You can take money out from a cash machine in China. There is no transactional fees whatsoever. So we thought, let's make it super easy. So this is how we monetize at the moment. So there's some other sort of little revenue lines, but the subscription fee is the main one.
So you just raised more than 10 million recently. So you're now in the big league of fintech in my world. What's the plan to whether integrate with existing multinational banks, or how are you going to utilize the 10 million so that it is becoming, Monese become a digital bank for the new generation?
As initial seed funding that we raised before our recent Series A, we used this funding in order to acquire a license and set up the systems, network, infrastructure, and to basically prove that the model actually can work and the service is something that people would be willing to use and pay for. So with our recent Series A, this is more for geographical expansion and so on. So with this money, we make it go a long way. So as I mentioned earlier, so the dream here is to build something that is usable across the world. So we started in the UK. We are making some moves in the different markets later this year. But the ultimate dream here is not to be a bank, but be something that is light and that is pretty close to what banks are and what banks do.
So we'll come back to that question, not a bank, but close to that. Jevgenijs, what about peer-to-peer lending? Obviously, you're in multiple countries in Europe. And at least in the US, peer-to-peer lending have been around for a number of years, both seeing the upside, but also at the same time some challenges. Yep. What are you seeing with your company and also the market landscape here in Europe?
Sure. I'd say that you wouldn't put the whole Europe into one bucket, right? There is a pretty large standout, which is the UK market. Some people remember actually those were the Brits that invented the peer-to-peer lending concept. Americans just scaled much faster. So if you look at the US market, then probably the market is several years ahead of what is happening in Europe. So as you said, it's been through ups and downs. It's been through retail money and the peer-to-peer concept, and it's now primarily funded by the banks and the institutional capital. Right, so in the US, they essentially went away from peer-to-peer lending concept and came back to the same institutional capital that the banks use, right? And don't even call it peer-to-peer lending, they call it marketplace lending, right? Because the number of peers is like 10 to 13%. In Europe, UK is going through the same process for the last probably couple of years, right? A number of platforms like Zoppa and Rateser and Funding Circle reached the scale where they became interesting for institutional lenders, and they are essentially replicating what the US platform's done and just doing it in the UK. But if you look at the continental Europe, the market is something like 30 times smaller than the US, even 5 times smaller than the UK alone. So all the platforms are still at the very early stage. For us, for instance, we're purely retail investor focused, right? And it's not that we don't want institutional capital, we just are not there, not at the institutional capital scale. So I think for continental Europe, we still have a lot of work to do to actually reach the scale of US or UK folks.
So talk about the retail investors, and then we'll come back to all the different options that as consumers have now is, John, you mentioned that the Bitcoin exchange that you are now investing in Riga, Bitcoin now is $2,700 to, $27,000 to $1. So, how does that change the landscape of the future of, investing in new assets for retail investors from your perspective, and why make an investment in Bitcoin exchange?
It's actually very fascinating. I mean, the exchange in Riga is called globotex.com, and it's intended to be a global Bitcoin exchange, so it's not just regional to the Baltics. It deals with customers from all around the world, and it's in beta program now. So you're going to start to see a lot of these new exchanges popping up, both locally and global exchanges. And I read something before I came here on Twitter. Somebody was saying, when is Bitcoin going to be included in the Dow Jones average? And it's kind of funny because Bitcoin and the crypto economy represents the new Dow Jones, if you will. The market cap of Bitcoin alone is approaching 50 billion right now, so 100 billion is not that far away. The entire sector is worth 100 billion, approximately. So what we're seeing with this is something very new, very early still, where the opportunities are massive in front of us, and for the people who execute early and execute correctly, there will be massive upside. The panel here is called The Future of Banking. So I think the way it relates to banking is we're seeing the emergence of something that allows individuals to be their own bank. And the digital wallets that we hold on our laptops or mobile phones, they become the gateway to that crypto economy. There's wallets now that can hold multiple types of digital currencies, not only Bitcoin. And when you put the power of that with each of the individuals, then there's no stopping that, because either the banks will get on board for trading in Bitcoin, or they will be routed around.
So on this point about future banking from the consumer side, I can open an account very easily in the UK on my phone. I can, if I want to gain liquidity with my capital, I can invest in various classes, whether it's debt or cryptocurrency. Sampsa, from your perspective, right, working for Nordea, one of the largest financial institutions, how do you think about all these innovations that are out there, both from an institutional perspective, where do you say, well, these are our competitive threats, or do you say these are opportunities to actually partner to bring these services and clarity to your customers?
I think they absolutely are an opportunity for us, and also for many service providers which we have not yet seen. And our approach into all of these is actually to enable the development and also make it more easy for these companies who enter into those developments and who want to be part of this growing ecosystem. So that's our approach. We see it as an opportunity, not as a threat at all, actually. So,
for large institutions, if I'm putting my capital, right, on Twino, you're not seeing that, right? It's alternative, it's a missed opportunity in some way, form. Or if I'm making investment in the Bitcoin exchange, again, I'm putting my capital somewhere else. So how would large financial institutions go forward, think about how do you, one, retain customers so they don't move their capital outside of the accounts that they may have with a large bank, and two, how do you then specifically enable them to actually get services from various platforms?
Yeah, first of all, most of our customers already have many other banking-like relationships than the one they have with us. So that's already been there, and it will be there. It will just expand. And then in creating these services, in some of them we want to be part of it as a bank also. In some of it we just want to be an enhancer and kind of an enabler. For example, sort of getting finance into these projects, kind of making certain people collaborate more and more together. So it's just much more multidimensional than it kind of seems out of many discussions we have been seeing and reading from different sources.
So from the perspective of the entrepreneurs, where is the dependency with a large bank? So I think for Monese, I still need to have a bank account, and it will interoperate with Monese, right? But so, I mean, that's just, so where is the dependency for you guys to work with larger institutions? Any motivation?
I can start that. Well, the dependency right now is Bitcoin exchanges are suffering from a lack of banking relationships. Banks are reluctant to work with Bitcoin exchanges, not so much because they see it as an existential threat, but more because they don't want to deal with the compliance issues, the KYC, the anti-money laundering. It's still not worth it for them because they fear the fines. And the fines that they potentially could receive exceed the benefit for the accounts. I expect that to change, and I expect them to get into the business themselves. But right now, that's a barrier because it restricts each nation's ability to buy and sell cryptocurrencies with their own national currency. It's extremely difficult and challenging to get these bank accounts, but it's only a short-term solution. The bridges to the fiat world and the crypto world are necessary initially, but once you get to the point of having a closed-loop economy, people can be paid in Bitcoin, people can spend in Bitcoin, and they won't necessarily have to go through that conversion or that on-ramp.
And what about you guys?
Yeah, I mean, for us, there are essentially two aspects that are crucial. First of all, yes, banks are the only institutions that can actually hold people's money. They've been given this benefit. You cannot store your money in Gmail or Facebook account. That's illegal. And second part is that, I mean, the banks still store the largest volumes of capital, right? In the form, let's say, of deposits. Essentially, through the state guarantees, deposits are perceived as safe investment, and this is where kind of the mass investors, right, not the active investors, right, but the mass, the majority of people out there store their cash. And this is how it translates in peer-to-peer lending is that banks in the US are essentially the largest lenders through the platform, right? So they pay their depositors 1 to 2% at best, and then they invest the capital through the platforms, earning 5 to 7 to 10%. So this is where the dependency lies between banks and peer-to-peer lenders.
So talking about KYC and regulatory environment, has it been challenging for you guys to build new fintech platform, and how have you worked with regulators to convince them that, look, there is no systematic risk that we're creating here, and that what we're doing is not different, right, from what's being regulated today?
So for us, KYC, obviously for everyone, KYC is massively challenging. It's ultimately very complex and sometimes also very manual work. So you can automate pretty much everything, but KYC, there are some aspects that you just literally can't automate when it comes to fraud and so on. For us, KYC has been #1 priority that we wanted to get right. When this was the whole idea of Monese came to be, because we wanted to make sure that KYC, how we do KYC and how regulator approves our ways of doing things, that they are user-friendly and they are friendly towards everyone, not just those people who live in a specific country and have lived there and born and whatnot. We wanted to make KYC, basically remove the complexity from the KYC from the user perspective. So, but it has been very challenging. So we literally spent 2 years before we launched on just figuring it out, how the technology should work, where the data is, because everything goes on electronically, right? Through mobile phones, there is no human interaction almost, so we don't see our customers typically. So you have to figure out their identity, who they are, where they are coming from, do they have any bad intentions, do they want to launder money, and all this you have to do in 2 minutes, and just based on bits and pieces, passport images and electronic data that you receive from all over the world. So it's not a small challenge at all.
I would add what's been happening in our part of the world. So peer-to-peer lending is still not regulated business in Latvia. we're obviously regulated on the lending side, but the investment side is still not regulated. And what happened is that when we started 2 years ago, we went directly to the regulator and said, we want to be regulated. We've seen a strong positive impact from regulation in the UK and in the US. So we want to be regulated, but they, looked at our volumes 2 years ago and they realized that we're just, there's nothing to regulate. We're too small for them and too relevant. But what happened essentially in just 2 years, Latvia became a big state in the peer-to-peer lending landscape. So the total volume of peer-to-peer investments in Latvia is bigger than in Germany or in France, right? And we're, 40 times smaller country. So then this was the point when the Ministry of Finance and the regulators woke up. Whoa, guys, you're pretty big now. Let's talk. So they are just now, learning, and we're helping them to understand the industry, what are the risks, and how to regulate it. But there's definitely, be a positive impact. So some of the bankers hope that regulation will kind of slow us down. I think it will be the opposite. It will provide a very strong stimulus for the whole industry.
And then let's just shift gears a little bit and talk about, there's kind of this misunderstanding that large banks don't necessarily, have the latest, greatest technology, which is somewhat untrue, right? I've learned over the years that banks actually make significant investments in technology areas to empower what you do with your customers. So if we think about the future and we kind of go through different areas, what are some of the areas that you're focused on if you think about 5-year time for your bank?
I think data will most likely be one of those areas, to be much more smart with the data, but also enable our customers to be much more smart and sort of also benefit from their data much more. That's perhaps the single most important area. And when it comes to developing all these things and then having latest or oldest technology, it's actually quite often our customers' technology we are using in our development processes. So it's very much a co-creation sort of type of a activity, the way we create our services. Quite often we only are sponsor of the project, and actually the actual application or service is done by our customer, a company.
So let's take some specific examples. So how do you see, robotic automation or AI transform banking?
I think it will be part of this big evolution we are now undergoing, and it's kind of like it's coming in various stages, not just as a one wave. It just comes more. Robotics definitely something we are already working with quite a bit due to our legacy system. So it's actually quite heavily used already, and we are quite happy with the recent successes in that area. AI still something kind of a more in the future, but something we are definitely investing into quite a bit.
And not to put you in the hot seat, right? So there is a talent war for software developers, data scientists, and so forth, and it's true in fintech as well. So how would, from a talent perspective, for large financial institutions compete with Monese and Twino and Bitcoin exchange of the world, where they're building cool stuff, right? As from a consumer's perspective.
I think co-creation is the word in there, and we don't see them that much as competitors, although in practice they are quite often. But we rather collaborate with the right ones and try to build things together for our customers, and that's at least so far proven to be the right concept.
And what are, for you guys, how do you attract talents?
No, as you said, right, we're working on something cool and exciting. So, the concept of fintech startup and peer-to-peer lending, and especially when you kind of get noticed and get into kind of leading position, excites people, right? But I think the most fundamental thing is that the main goal of most successful fintech companies is actually to bring consumer benefit to the end consumer, right? And I think this is the fundamental difference between how banks approach technology and how fintech companies approach technology. So essentially, when a bank thinks about innovation and improving their processes and systems, and they think about cost saving, right? When fintech uses technology to make transfers 8 times cheaper, they pass at least part of this benefit to consumers, right? So there is a fundamental difference. You know, I could illustrate with one story. I was in a conference in Germany, and there was a head of innovation from one of the largest global banks speaking about their mobile initiatives and how cool the mobile app is, and that people can do everything. They don't have to come to a branch. And I asked a pretty simple question, you know, so you obviously have lowered your costs, right, because with the app. So do you plan to pass part of the benefit to the end consumer? And the guy didn't get the question. Like, yeah, well, you know, it's definitely cost saving, and we're going to introduce a number of new services to the app, so it's also a revenue stream. So, okay, I passed on that. And then there was another guy probably sleeping during my question. He raised again, and he asked the same question. And then the banker just went bananas. He's like, why are you asking about this cost? You know, we have these expensive branches and ATMs. It costs a fortune. Why do you complain about the cost, you know? And then, you know, kind of, you realize that whereas end consumers probably don't need your infrastructure, you know? We probably go to a fintech company that just does it cheaper, right? And I think kind of this belief that, and this goal of fintech companies to actually change the way people use financial services is more inspiring than working on a cool tech.
And Norris, from your perspective, I mean, I know you're hiring, so I mean, you're not the only digital bank, right, that's mobile native. So how do you attract talent? I mean, it's pretty hard hiring right now. So
we had a member of our early team whose last day was today. She moved on, but she said that for about a year or so she didn't actually realize that she was working for a bank. So that was kind of cool. So anyway, I think how we attract talent and how we retain talent is we attract people who genuinely want to improve things, not just incrementally making something better, but actually literally leapfrogging and making things 10 times better than they currently are. It's not just a KYC, but if I dream about sort of a light bank that is available to anyone, anywhere, I mean, also, you know, if you talk about credit and so on, typically banks are providing credit from their own, lending their own money and providing specific type of products. But what if a fintech, what if this light bank comes along and actually completely expand that horizon and offers customers more choice because they are not lending from their own balance sheet, for example? What if this fintech startup takes multiple lenders, put them all into one interface, and customers have much wider choice? And what if this customer then has choice of, for example, if this customer has really good credit history, they get better loan rates. If they have non-existent or let's say thin credit file, they are not pushed aside and ignored, but actually they're still going to be served. Yes, their choices are going to be limited, but they have still opportunity in life to get funding for the business or whatnot. So I think this genuinely excites people, and you know, we get to do cool things also. So where sort of older, let's say more sort of established banks, where they're struggling, because the existing systems are super difficult to maintain, they're expensive, and you know, all this regulation, everything is dragging things down and making them slow and very cautious. We are not completely free of that, but it's way easier if you build your own systems, for example, obviously carefully audited and safe and so on, but it's just fascinating what you can do if you have a bunch of people who are genuinely excited about stuff, very smart, and there is cash restraint also sometimes. That could be it could be actually a good thing sometimes. If you have a limited amount of cash, then you maybe think in different ways. So I think people who just want to do cool stuff are genuinely motivated by improving things. This is the kind of talent that, and also typically those people who have been through the struggle themselves, so they have witnessed and they have experienced what can actually happen if you tend to be a little bit outside the system or on the borderline. And if once they experience that, there's absolutely, you got religious followers literally.
Great. John, you wanted to ask?
Yeah, I wanted to make a comment about your banking question, because most innovation departments at a bank, if you see Department of Innovation within a bank, it will be down in the basement, you know, near the office supplies at the far end of the hall. And maybe some of the smaller banks are treating that differently, but I think for the larger banks, that's where you see the innovation department. And the reason for that is because when you're talking about these new products, any new products in banking, you talked about AI and robotics. I mean, that's just some of the new products. But for every new product manager at a bank, there's probably about 8 or 10 attorneys that are telling them not to do it. And so this is the problems that they face. I actually think it's going to be very slow going, especially for the larger banks that refuse to adapt. And what that means for us is that the people and the institutions of the future that we will think of as banks, they are not even what we think of as banks now. So it'll be more like the Googles and the Facebooks and the Amazons, Apple. These will be what we think of as banks in the future.
Sampsa, what's your view? How do you respond to that?
I think, first of all, that's most likely right, and this kind of a famous Bill Gates saying about banking is most likely true. But then also, we also see ourselves more as a service company rather than just a bank. And then when it comes to kind of deploying new services for customers and doing that from a cost savings point of view, I think that's quite a bit part of also our past, but kind of a past in general of banking. And for example, when we launched this year a Siirto service in Finland, instant payment service free of charge for all our customers, it was not definitely done from a cost savings point of view. It was just done for making it much more handy for customers and also kind of make them use certain other services even more. So nothing to do with cost savings. And I think the world is going that way, that also we need to become much more relevant, much more easy to deal with for our customers and come up with these new services. And quite a few, at least Nordic banks, have been also quite successful in that recently. And our sort of payment apps and all these things are actually quite regularly used, much more regularly used than some other perhaps individually more sort of need services, because they connect these customers into different other services.
And then just on the business model, Samsung, for kind of, if you look at large institutional banks, both the institutional side and the retail side, what has to change? I mean, we talk a lot about business model, right? And how technology is underpinning some of these innovations. I mean, what has to change from the business model perspective for large financial institutions for them to, over time, actually be able to become more of a service company that provide these modular things to customers?
I think we need to understand that the service production and kind of the usage of service is becoming more an ecosystem than just one-to-one relation, as banking perhaps was some time ago. And if you understand that, then you also can start developing your services in a different way and also invest into your customers who actually also develop those services. And you don't see many competitors as much a threat anymore, more an inspiration and then kind of something with whom you need to cooperate and collaborate.
So let's talk about from a consumer perspective, right? So I can use Twino, I can use TransferWise, I can use Monese. You all provide somewhat different capabilities and it gives me value, right? And I can also put some money in Bitcoin exchange if I wanted to. Where's interoperability? Because right now, I still have, right, to go into all the different apps, log in maybe with one gateway, but multiple, and I have to manage my identity. You have to do KYC separately. I mean, when or where would that interoperability happen, or will actually happen?
I mean, probably a large question if all the consumers actually need kind of a single kind of banking type login, right? You kind of log in once and you have everything, investment transfers and so on, right? What's not? Because then you realize you're locked into one service provider. So I think where at least for now fintech is heading is that we have a highly focused service provider, right? Lending, transfers, robo-advisory, right? And they do it best. So yes, they do it at the cost that you have multiple logins, but then you get the benefit of more efficient services or high yields as with us. So.
What about you, Norris?
I think the future is definitely moving towards the direction that customer ultimately holds control of their own data, and they are just willing to share the data with selected service providers, whether it's a bank or a lender and so on. It's not there yet, but it's very clear that taking Payment Service Directive number 2 that is coming now and all this into account, the future is definitely, you know, it's going to be formalized that way, that customer is the ultimate boss of their data, and yeah, so that's going to join all the services together, sort of.
So customers own the data. So,
Yeah.
John.
Well, I just want to make the point that interoperability comes from permissionless access and from global access. So the last country in the world to adapt digital currencies will be like the last country in the world to adapt Uber. I mean, they will be seen as so far behind. And you don't want to be in one of those countries. So, but let me give you an example on interoperability, because I was just at a conference in Central Africa, and they have more mobile phones than homes that have electricity. So there's a mobile phone explosion going on, which means that there can be a mobile banking and mobile payment explosion also going on. Now, if you were to do this the traditional way, you would involve the banks, you'd involve the mobile operators, and you would involve the regulators. So you'd have 3 constituencies trying to all get a piece of that mobile payments pie. If you do a rollout with an open source Bitcoin wallet or cryptocurrency wallet on Android or iOS, you're completely permissionless. You don't need the permission of the banks, you don't need the permission of the regulators, and you don't need the permission of the mobile operators. They don't even know what apps are running across. So you can bring an entire country online into a global payment system by virtue of using this universal access, permissionless access, and there's really nothing stopping it right now.
I think the view is that, I mean, at least both from an investor and a consumer perspective, I mean, it's a very fragmented fintech landscape, right, in each of the segments. And so while individual consumer can gain benefits by using different apps, I could make the argument that if I have to approach it in a very fragmented view, my overall cost or expense for using different apps will add up, and I don't necessarily have overall visibility into my whole world of banking, if you will, right? Both on the saving or checking or the lending side.
There will be consolidation in that over time.
So that's my dream as a consumer is that, you know, I have all these things and it's just still very inconvenient from a consolidating perspective. Right. So let's talk about trend. And you all do, again, different things. So we're going to start with different topics and then can all comment on. So start with you, John. Digital currency. So Bitcoin has been around for a long time. We see huge volume, huge price increase, and there are a lot of other structures that are coming out, right, with respect to tokens and so forth. And at the same time, you have governments like China that are talking about potentially making digital currency as national currency for a variety of reasons. So give us your view on where digital currency is going.
Yeah, there's 2 parts to that. Digital currency is a monetary unit as well as enabling the security of the global public blockchain. So from the blockchain perspective, you could have many other applications such as smart contracts and various things that are leveraging the immutable blockchain. But just going back to the payment side for a second, if banks and large companies just treat Bitcoin as another currency, within the ISO, it already has a pending currency code. So just like GBP or EUR, the code for Bitcoin is XBT. And it's pending code. It's on Bloomberg. It's on Thomson Reuters. It's actually quoted as XBT. So when you start looking at it that way, it becomes another asset in a portfolio. And you can also leverage the ISO currency codes within enterprise systems, enterprise accounting systems, enterprise trading systems right now. So what's evolving around that is an entire spot exchange market, a derivatives exchange market. We're starting to see the emergence of futures and options contracts in Bitcoin that parallel the other national currency future contracts. And what I think is most interesting is we're seeing the emergence of a Bitcoin interest rate market, where it's actually quoted an interest rate on a 1-day, 30-day basis. We don't have a 1-year quote on a Bitcoin interest rate yet, but if you extrapolate from the other durations, the Bitcoin interest rate fluctuates anywhere between 30% and about 150% on an annual basis. So we need these things in place to start to develop a capital markets.
And just going off of that, I mean, what's the implication, right, for all these kind of derivative structures of Bitcoin?
I think the implications down the road are once you have more liquidity in the spot and the futures market for trading, it will allow institutions to keep these crypto assets on their balance sheets and hedge the exposure. Right now, you cannot hedge the exposure, so it's a very a new Wild West cowboy kind of market. But once you're able to hedge the exposure, as you do with other currencies, it will really start to take off, and that will be another buy signal.
And just jump to Norris. I mean, what's your, going off what John is saying, right, about what's becoming available to sophisticated retail investors? I mean, in the ideal world, what is digital banking? Like, what do you want to have in your platform that are offered to customers?
Everything the customers really needs, I mean, to run their daily lives. Just it has to be super easy, super simple, super accessible.
Just saving, checking, that's it?
I mean, there is lots of things, right? So what are the primary things that everyone needs? They need a safe place to store their money somewhere, easy access in and out. You know, credit, everyone needs credit. Those who are smart, they want to save money, obviously. Those who are even smarter, they want to invest. So how about taking all these services across the world, put it inside one platform? Could be a way.
Now you partner with credit card company, I think is either MasterCard or Visa. I mean, from your perspective, I mean, the physical card concept is really interesting, right? There are lots of fintech companies now that are trying to take the physical card out of the workflow. I mean, where do you think payment and credit card industry is going?
I think cards will completely disappear. Everything is going to be seamless. Like I think Tavet said on stage before, you know, literally he has used Uber so much that when he walks off from a regular cab and there's a cab driver shouting like, oh, pay me, because people are really, actually it's the same way. I tend to forget. I use Taxify and the other companies in London and Tallinn, and you know, payments are so seamless. They are in the background. You don't really need a card anymore. So, and I think, yeah, definitely the plastic is going to be dead pretty soon.
So would the partners of the future, I mean, I think John mentioned this, like Google, I mean, for you guys, I mean, would the partner for the future, not necessarily large financial institutions, I mean, maybe they provide certain part of liquidity for what you're doing. Is it going to be like Apple and Google and Samsung of the world, where these are both, you know, device software players that are becoming more and more entrenched in financial services? How would you work with these firms that are building out?
Question for me.
I think, you know, if you think of Google and Facebook, right, and then probably these guys are even the bigger threat to banks than all fintech startups combined, right? And for a simple reason, they have more data than banks or than we can ever get. So if Google, right, or Facebook decide to get into providing financial services, and there are a number of attempts into doing that, right? Like micropayments on Facebook and in Gmail. I think then we can see kind of fundamental change even within our generation, right? Because for fintech companies, it's going to take a while, right? A number of generations, just that the banks are so much bigger than us. If Facebook and Google come into play with their data, with their user base, with their attitude towards user experience, I think that'll be like a real disruption. The question, if they decide to do that, if they decide that it's part of the future, And the second question is when?
We have 5 minutes. I think we can open up to the audience. So we'll go from this side to other side. Gentleman over here. If you could just say who you are and your company and then your question.
Hello. Hey. My name is Joao. I'm from here. I work in marketing. It's no fintech related. But I have a question which is, so we talk about the unbundling of banking and how startups are eating away at different verticals and doing a better job than some of the old school banks. And then banks suddenly wake up and they figure out, oh shit, we got to get our shit together. And they either start developing some solutions or they start buying some of these fintech companies. So I personally think that the worst case scenario for a company like TransferWise would be to be acquired by HSBC. Does the panel see that, the future, and you talked about how there's going to be consolidation in the fintech space, in the startup for fintechs. Do you see that consolidation means that old school banks are going to start acquiring more of these startups, or are the startups going to start collaborating, and then the unbundling that they were doing on their own, then they're going to start creating a real competitor for a bank? So, TransferWise cooperating with N26, these sort of things. How do you see this space evolving?
Yeah, I think it's more the fintechs collaborating on that example that I was giving there. I was really talking about the apps themselves that would be consolidated. I don't see, there are exceptions to this. I see innovation within banks, usually on the smaller banks that are eager to work with new products and especially cryptocurrencies. But you don't usually see disruption come from within. So I definitely lean towards the fintech startup side. The digital camera was invented by a guy who worked at Kodak. And the poor guy, he's only famous on Wikipedia now because he went to the board and tried to tell him the idea, and they said, what, are you crazy? We make all of our money from processing film. So banks have to be a little bit cannibalistic here.
Yeah, but we also see banks acquiring startups. So this is definitely going on. I've seen so much of this happening, and it's kind of hard as if you're a startup and if you're not, close to IPO yet, and it's really hard to resist money, to be perfectly honest. So I think in the future, in 2017 and 18, we definitely see some of the guys sort of not giving up, but going down the easy path, and sometimes those banks that they have always hated become suddenly best friends, and there is, they sell, which would be unfortunate, but inevitable.
Yeah, I think it's more a question to the founders and the investors, right? Because with guys like TransferWise, they clearly proven that there is a business model, right? So if we just don't sell off and keep doing what we're doing, we'll be bigger than the banks that want to acquire us now. Right, so that's kind of the story. But if the acquisition wave happens, right, the innovation will definitely slow down or will be converted into cost-saving initiatives. I think the new generation of fintech startups will come, right, and they will have proven models, proven ways how to get there, people with experience in lending, in payments, in robo-advisory. So the second wave will be much faster, much stronger and much bigger impact on the banking.
Questions? Gentleman over there.
Right, I'm Andreas. I'm actually a student of computer engineering, but I have a question regarding the idea that the economies are moving more towards emerging markets where the traditional banking system as it is in Western countries doesn't really work. So how would such a situation, or what would be the future in regard to such countries where there isn't actually a working banking system, where there are actually other companies that offer the services that banks usually would provide?
This is already happening, right? So M-Pesa in Africa has been a huge hit. These guys didn't have a banking system. They just completely bypassed the whole thing, jumped straight to the mobile, massive hit. So. And we see this happening in other emerging markets also, so straight to mobile.
I think if you look at, WeChat is also another great example, right? Alipay, they completely surpass, US is so behind with respect to payments, mobile banking, and So if you look at their model, I mean, they develop something that is truly for the emerging markets, where they're able to not only get the younger generation, but if you look at their statistics, probably half of their users are, the demographics with age above 40, which is phenomenal. Now they're moving to the developed market, right, with what they learned. So, WeChat, Alipay, they're actually moving to Australia, now come to US. So it's almost like innovation is happening outside of a lot of the markets where you have huge capital markets and liquidity, and then bring that back from the emerging markets. Other questions? There's one question all the way in the back.
Thank you. My name is Ave Sullin, and I work for the Credex Credit Insurance in Estonia. And I have a question that you have talked a lot about banking services and the future of banking services for private persons. But how do you see the future of banking services for corporate customers for trade credit? What will be the innovation in this sector, not for the private persons, but for the corporate perspective? Thank you.
I can answer into that. I think it's especially within those customers, because their customers are quite often both companies but also private individuals, where the kind of a ecosystem, this kind of a co-creative, co-developer ecosystem will already kind of a sort of gather space, and it's actually already there. So a lot of banks, a lot of different other vendors, they have also very strong focus on the customers who are corporates, who are also kind of a third sector institutions. So for us banks, it is actually a very important segment, and obviously private individuals are as well, but the corporates different size, but also third sector, like different sorts of agencies and so forth, they are also a very, very important segment, and therefore we develop services also for them. And the co-creation is the word in there.
I think just to add to that, John probably also has a perspective. So if you look at, trade finance and kind of next generation trading platforms, right? Take the example of Funderbeam from Estonia. It's an entire trading platform built on blockchain. So taking out all the intermediaries of reconciling accounts, maintaining the capitalization table, connecting both investors and the companies. That's essentially performing the functionalities of an exchange on a full blockchain-based backend. And I think you see a lot of innovation explored in that area with respect to trade finance, connecting the banks, the treasurers, and so forth. I think the other you mentioned is, and a couple of you mentioned, is data. And there are huge utilization of both how do you build a full data pipeline and generate data analytics so that you can serve your corporate customers better, and also automating. In the U.S., like BlackRock, right, which is one of the biggest asset managers. They're taking out a huge number of traders and asset managers because they have the analytics, they have the AI, they have the systems to be able to deliver same kind, if not better, performance without people. So, other questions?
I would add that in Europe, financing of SMEs actually has a much stronger case than consumer lending, despite us being a consumer lender. Germany would be a great example for that. That's a company with a highly competitive banking system, probably overbanked, and a lot of bets were made on making disruption in consumer lending, and that didn't really work or scale up, right? Because the banks can serve bankable clients pretty well. But when it comes to SMEs, these guys are really underserved. So this is a life and blood of European Union and still not served by the banks, right? So if we really talk in the deals, under 10 million, then forget about it, right? The cost of credit committees is just not interesting for the banks, to incur. So I think SME lending is a massive potential. You'd probably name just Funding Circle, the only peer-to-peer lender that made waves in SME lending in Europe. So the rest is completely open opportunity.
Any other questions? Well, great.
Thanks.
Thank you.
Thanks.
There's something for you.